Look, from a very high level, the Fed has they have two mandates, right? They have one is stable pricing, and that means in their terms, basically, they've defined that as a constant 2% inflation. Okay. If it gets above that, they try to bring it down. If it gets below that, they try to bring it up because they want a constant 2% inflation. Why that is, we can get into later. But the second thing they have to do is their second mandate is full employment. What does that mean? There's no real number around that. There's no metric that they can point to, but it just means that they look over a long period of time. Like, where does it feel like we have full employment in the economy? So what we've seen over the past, I'd say about last 3 to 6 months, is inflation has come down. It's kind of leveled out here, in my opinion. It's kind of leveled out at around 2.5 to 3.5%. But then the Fed came out a week and a half ago, and they said, victory, we can start lowering rates, and inflation is not a problem anymore. Now we're focused on the employment numbers and the employment situation, because we don't want that to spike up and have a real high unemployment rate, which means that we're heading into a recession. But that's kind of where we at.
First of all, the inflation numbers are a joke because they're not accurately calculated, and they don't really reflect what we're all paying in terms of inflation. I mean, I had a home where the homeowner's insurance went up 100% year over year, and my auto insurance is up 35. I mean, there's just no way that what they're reporting is real. And shadow government stats, John Williams has documented that for years. But being all that as it may, it is arguably lower than it was when it was at 9%. I mean, things are not going up as quickly as they were at the peak of the pandemic, and when they were still printing money excessively. And so, yeah, I mean, they've declared victory, but you've still seen some of the mainstream economists come out, like Cargman, has come out and said, well, they should have a higher target, which is just, absurd. And my view is it's really just a temporary phenomena before the next wave begins. And in fact, something we should go into it. I think what kicked off the next wave happened last week, which was when China came in, and very much like Mario Draghi saying, I'm going to do whatever it takes to save the euro. China said they're going to do whatever it takes to save their economy, and they did. They came full barrel with QE, fiscal stimulus, supporting banks, making direct deposits in banks. I mean, it was really quite stunning. And on that day that they did that, a lot of commodities went limit up. The bottom line is that the fiscal situation, as James has so many times laid out, and I've laid out as well, that the debt doom loop that we've got absolutely requires that they continue to print money, because if they don't, the whole thing collapses. Right. And so they take turns. The U.S. does it at one point in time, China does it at another. They all add to the global M2. And so, my view, I think it's James's as well, is that we are going much higher in all of the assets that government can't print.
It's kind of across the board, and China is important. China has a 5% GDP growth rate target. That's higher than ours, and so they want 5% growth rate. And if that means they have to do it through stimulus, they're going to. They are suffering what could be a deep contraction if they don't stimulate. So the amount of that, I think, is going to end up being more. We have to look at the figures, looking at what the Fed is doing and what's important about this, and why it's so important that they have kind of declared victory on inflation here, while it's not really tackled yet. So if you go back to what Powell says, Powell has declared over and over again that they look at PCE, okay? And that is the metric that they want to look at, is in specifically core PC, which pulls out food and energy prices. So this is the price of the consumer expenditures in index, and so it's a little bit different than CPI. It's also manipulated. It does use CPI underlying data to calculate it. It's kind of all incestuous. But there's a great chart that shows the inflation rate of 1970s, how it really peaked up. It came to kind of a peak, and it came back down, and then it ripped higher again.
Yeah.
And if you overlay today's inflation trajectory, it is following the exact same path. It's actually a little bit frightening how closely correlated it is. Now, it's a different metric. So we didn't go as high this time. We only went in the 9%, 9.1% range versus the 1980s where we went into the 20 range. So it's a little bit, but the trajectory is very similar. And so my concern here is that as the Fed turns its attention to unemployment, that they're so concerned with a spike in unemployment that they allow for the expansion of the money supply to continue. They lower rates, okay? They brought them down by 50 basis points.
Bitcoin's going to outperform gold, no doubt, over the longer term, but gold has always been more attuned to what the Fed's doing and inflation and monetary debasement, just because there are more gold holders in the world than Bitcoin holders, and they smell it early. And to your earlier question, Nat, of, have they really turned the printer back on? I mean, the answer is no, but they've taken a couple of steps in that direction. They said they were going to stop tightening. They did that when things blew out last fall, and they got scared that the 10-year was over 5%. So that 12 people within 10 days came back and said that the rate hike cycle is over. And now the rate cut cycle has started. And then they took QE and they cut it in half, actually more than half. They took it from
60 billion a month. Yeah, 60 billion a month down to 25 billion a month.
Down to 25, exactly. And I predict that they're going to do probably 2 more rate cuts this year, and each one will probably be 50 bips. And the reason for that is that the interest expense is eating them alive, and they know it.
Well, James, you brought up the risk of a recession, and this is actually a place where I get very confused. It's very hard to see the signal through that noise. Can you help me?
Yeah, I mean, part of it is that part of the economy is in recession. You can see it. Lower demographic is hurting. The credit card default rates are over 11% now. Right. The multiple of the cost to buy a home versus salaries is at all-time high.
Yeah.
The food inflation has just been insane. Yeah, and inflation is down, meaning it's decelerated, but we're still up, 2 or 3%, 4 or 5% from last year. I mean, look at your grocery bill. And so clearly there are pockets of recession. Both my kids just graduated college the last couple of years. They've been fortunate enough to get jobs, but most of their friends are struggling. It's not easy to find a job right now as a young professional coming into the workforce. That's an indication. I feel like it was in 1994 when I came out. I mean, it was a difficult economy to actually get a job in, unless you were going to Wall Street or and to some sort of emerging tech company. So, but the other side of it is exactly what you were saying before, which is that massive fiscal stimulus. And there's so much government spending, and a great percentage of the jobs that have been created in the last 2 years have been government jobs. And a large percentage of the jobs that were so-called created in the last couple of years have been revised out. So you had 1 million jobs taken out of the calculation last month, and so it's difficult for you to see exactly. The government is trapped, and they're going to continue spending right through it and continue flooding the market with liquidity to avoid a sharp downturn. If we see one, it'll be a V recovery, just like it was in 2020, like Larry said, because of this.
Right. I tend to be of the David Hunter camp that we're going to go into a melt up, just that they're going to continue to cut rates. And it's, this is the biggest stock and everything bubble in the history of the world. And it's going to, in my view, get bigger. But that doesn't mean that at some point it won't end. Right. And at some point there will be no buyers left, and it will end. And it will end very badly. And when it starts to break, I mean, they can't handle a lower market. And when the stock market starts to break, the negative wealth effect, et cetera, is going to flow through to everything. And as James points out, in 08 and 2000, when we had those big market downturns, the deficit grew between 6 and 10% because, tax receipts come down from the stock gains, and costs and social costs go up. So, we're running a big 7%, 6-7%, GDP deficit right now. Imagine when that doubles in size, and then the bond market fails, and the only way to solve that is to go buy all the bonds. So, the Fed balance sheet goes from 7 trillion to, take 36 and add it to 7, right? I mean, there's really an unbelievable train wreck coming at some point. But until that time, hey, I mean, the band is playing on the Titanic and everything looks fine. Now, where's the iceberg? I don't know. I mean, but the point is, this is really out of control. I mean, this government is out of control. And you had a presidential debate where no questions were asked about the fiscal or economic, situation or balance sheet of the U.S. government. Nobody dares to go there. I mean,
Right.
it's just not talked about. And yet, there's a train wreck coming, a big, big train wreck. I mean,
Well, I could also see it just manifesting in assets, which has been part of the problem and why so many people feel left behind and unable to keep up with the cost of living because assets are owned by such few people, which is why I think we need to get the word out, right, on Bitcoin, the easiest, most accessible asset that you could start to dollar cost average into. But I did want to bring up the election because when I go out and I meet people, it's like their biggest pain point is the economy. So I want to get your take. Do you think the election is being truthfully reported in terms of where the polls at? Do you think that it matters? Does the outcome even matter? Is it good or bad for Bitcoin? I'm just curious what's going to happen with the election in your eyes and minds.
We've known that for a very long time. The last two election cycles, Trump's support has been underreported. I mean, that's just reality. Part of that, I believe, is the reason that the mainstream media has villainized anybody who has been in support of Trump for the last 10 years, basically. And they've said if you're in support of that, you're far right extremist, you're racist, you don't
Hitler.
care about women, you're sexist, and basically it's become this thing with the mainstream media that if you're for Trump, then you're an extremist. Now, what I believe has happened over the last 10 years is that the Democrats they've been captured by the far left, and they've moved that middle, that center, all the way to left. So if you're just a regular conservative and you were kind of in the middle before, you're now being seen as a far right extremist. So that's always been underreported. The second thing is, yeah, the mainstream media, it's been shown that these polls are oversampling Democrats. I mean, you oversample Democrats, you're going to get a higher Democratic number. Polymarket doesn't look like it's been accurate recently. It looks like it's also been kind of captured and being manipulated. I don't know how or why, but it doesn't foot with some of the more independent polls.
Well, it's not necessarily what I'm seeing here, but to Natalie's point about people being dissatisfied, I mean, I share James's view. I don't trust any of the polls. I don't think they're right. I think this, the way I view this election is pretty straightforward. I think Trump wins it, running away if it's a fair election. And I've got great concerns that it may not be a fair election. I've seen enough to know that probably the last one might not have been fair. And, that the other side existentially, does not want this guy to win. I mean, they've tried to kill him twice. And, they're going to do everything they possibly can to make sure he does not win this election. And, as long as you've got absentee ballots, as long as you've got all these illegal immigrants voting, you don't have explain to me why somebody doesn't have to show their driver's license or some form of ID in order to vote. I mean, there's so many things wrong with the electoral process. We have electric ballots, not paper ballots. I mean, on and on and on. So, I'm very optimistic about how the country will choose. But, like Stalin said, it really isn't the votes that matter. It's who counts the votes. So, I'm somewhat cynical in thinking that, that maybe he won't be awarded the presidency, even though he's won it.
It seems to me like no matter who gets into office, we have to print. We have to provide liquidity to the markets. It's the only way to keep this Ponzi scheme going. So does it really matter who gets in November?
In my view, it does. I think you're right. I think Kamala is more aggressive about UBI and spending money. And I think if you're really rooting for a monetary collapse, you want her to win because she's going to bring it in quickly or quicker.
Bazooka and fire hoses of liquidity. Yeah.
Yeah. I don't think Trump is necessarily a lot better, and he's dealt the same hand. And at the end of the day, the liquidity is going to have to come from the Federal Reserve. So it's really not even a political decision at the top.
All right.